Yeah, am I a college student or am I a Forex trader? Either way, I'm tired. So let's get going. Yeah, you guys are nice. Thank you, Joe. No, it's not University of Phoenix. Chuck, no, it's not Yale. I'd appreciate it. Yeah. I have two neighbors that went to Yale. Can you imagine? One of them, every so often I get their alumni magazine at my house. So the Harvard police are going to start accusing me of things. Anyways, hey, good morning. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Boom! Hi, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. Namaste. We appreciate you. Please visit TradersWay.com and open a demo or a live account today if you have not already done so. Test out our execution speed. It's quick. Check out our spreads. Very, very competitive. You can have an ECN, you could have a fixed spread, you could have a variable spread. It's your way, a trader's way with Trader's Way. I'm here every single day, 7:30 in the morning, Monday through Friday, regardless of the weather. There's been hurricanes and typhoons, and I coached in a typhoon and then a week later in a hurricane. That's not too bad. That's a crazy week for most people. But here, it's just regular business. Earthquakes, back in the old day, I think I did an earthquake. Tornadoes, blackouts, doesn't matter. Doesn't matter what country. I've coached from Canada, coached from well, California and Florida and Illinois and Texas, and recently Singapore. I've done from China. I've done from Japan, South Africa. That's all just in the last few years, last couple of years. Anyway, so I take you with me because you're important to me. I like you. I care about you. Joe's like, can't believe that guy is Canadian. No, no. Well, they kicked me out for a reason because they were jealous. So, anyways, yeah, I'm tired, very, very tired. I haven't slept very much, and we've got all this central bank stuff going on. So, as I typically do, I'll say, let's keep this one short, but I'll probably babble on. But I apologize now if I got my A- game going on. And we'll get through it together. All right, cool. So, yeah, yeah. So, all right. So we got the Fed raising interest rates. Great. The Fed expects a little bit of a boost from the tax cuts that haven't passed yet. So that's interesting, right? There's some hopeful thinking. Um, here's what I've been hearing. Where's my drawing tool? I was told today by Bloomberg while I was showering, because I watched Bloomberg television while I shower, that Trump said a family that makes $75,000 a year will get an extra $2,000. I hope I get this right. Yeah, my brain is shot here. What I was going to do is look at the marginal propensity to consume, which you could say in the United States is about 95%. So then you take 95% of the 2,000. And then what do you do? See, do you guys remember what 1 over R plus E is? I'm going to talk this out because it might help me. I might, by the way, I might I might not remember the formula. Yeah, that's the money multiplier, right? What that says is if you put $1 in the bank in the United States, 10 cents has to be parked at the Fed, and 90 cents gets put into the economy because, right, let's say you borrowed money so you can spend it, right? So you spend it, and you buy something, and then that goes into someone else's bank, and 10% of that goes into that new bank, your bank, I guess, and 90% of that gets spent, and then 10% of that. And what happens is since it's 1 over the reserve requirement, which is 0.1, plus E, let's just pretend E is 0. So 1 over the reserve requirement ratio means 1 over 0.1 is equal to 10. Okay, which means for every dollar that enters the economy, as it goes through and gets spent 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 and gets spent, by the time you get all the way down, $10 has entered the economy. Okay, that is called fractional reserve banking. Well, when you look at what they're proposing here, changing the MPC, marginal propensity to consume, is income. Okay, and you could even do income expected income, minus taxes plus transfer payments. Okay, and so right now, what looks like is happening is that taxes go down, which means you have money to spend, and the marginal propensity in the United States is, let's say, oh, it's almost 100, but let's say it's 95, which means 95% of this $2,000 is going to get spent. 5% is going to go to pay down bills and stuff. That's your marginal propensity to save. Okay, and there's a multiplying process. Gee whiz, I forget, but it's similar to the 1 over R plus E. But let's just say the $2,000 gets it won't be multiplied by 10, but it'll be close or whatever. So let's just say it's 10. What'll happen is the new spending kind of goes through the same process where you buy something, that goes to the bank, and then they buy something, and then someone else buys something, and someone else buys something, right? And anyways, what happens is $20,000 gets put into the economy from a $2,000 tax cut. Ryan, do you know that formula? Did you do that one in any of your econ stuff? You know what I'm talking about? I just can't remember it. I don't know why. Sorry. I'll do it for you next week if you want. I've just been so focused on my other work. But that is something I should know. So I apologize. But my point is, it's not like 2,000, let's say 100 million people get $2,000 extra. Well, it's not 100 million times 2,000. You have to account for the marginal propensity to spend, but then there's a tax, I guess you could call it like a tax cut multiplier. Okay, you get it? So it actually it has a bigger impact than just a flat number. So you basically just multiply that by 10, if you will, as it goes through the economy over time. So whatever. So the Fed is suggesting that Is it Keynesian stuff? No. Okay. No. See, Keynes would have the government just make purchases. Okay. Right. That's what John Maynard Keynes suggested, where you move the demand curve simply by the government making more purchases. This isn't the government making purchases, right? So to do that, I guess what you're talking about, Joe, is you want to improve GDP, right? GDP, and the econ that's supposed to be a D. Okay, you want to improve GDP because the economy sucks, right? So when the economy sucks, you have unemployment is up, right? Unemployment. I don't know why they do it this way, but unemployment. You always have to think backwards. Unemployment is up and productivity is down, and all that kind of stuff, right? So the components of GDP, as you guys know, is wow, my brain is really shot. So I got the G here. Oh, consumption, consumption. Not government purchases, not necessarily government spending, because you got to take out transfer payments. Government investment, which is basically purchases that businesses make, plus real estate transactions that consumers make. So it's not just business investment. And then plus net exports, right? Or import export net X, I guess we can call it net export. All right. So what this means is if consumer spending is weak, then the government just comes in and makes up for it. Okay. That's not really what's happening. Okay. So that's not a Keynes thing. What they're doing is changing the consumer's income, right? Income by, right? What's disposable income? Disposable income is your income minus taxes plus transfer payments. So your income goes up, your nominal income goes up, and then you transfer that through your marginal propensity to consume, is what I was trying to say, and all that kind of stuff. So in this case, they're trying to stimulate C, where Keynes, in contrast, would stimulate G. They would just go out and buy crap. Okay. So no, that's okay. Um, so the Fed said part of their outlook for wanting to raise interest rates 3 times is that that's going to spur the economy. Yeah, maybe. Yeah, could be. I don't think it's as no. I don't think anybody thinks is as much as the sales pitch has been that we've been given. Also, it doesn't always, like, what if the marginal propensity to consume changes and falls while the marginal propensity to save goes up? Okay, so for example, when the government, in the worst of our recent recession back in, I don't know, 2010 or something, when people were out of work, right, 10% unemployment, the government did 2 things. Cash for clunkers. You're out of a job, you're out of work, you've been kicked out of your house, but you can buy a new car. And the other thing the government did was gave everybody $300. Did that spur the economy? I think people just paid their credit card debt. And that was that. The marginal propensity to save was dramatically high. And they're like, whoa, that didn't do anything. Uh-huh. Right? Wow, the government is so smart. The government is so smart. They thought everyone would just go out like, yeah, let's get models and bottles, baby. Like, I got $300. Woo! We're going to Walmart, right? Yeah, so anyways, guess what people did? They paid off their credit card debt and nothing happened. Yeah. Yeah, they all bought bitcoins, and now look, right? So whatever. The UK did not raise interest rates this morning. We have the ECB battling on pretty soon, right? They're also not going to raise interest rates, but you should comb through the uh, the the press release and try to figure out 2018. Okay. Is there enough growth for the ECB to taper out? Is there enough inflation for the Bank of England to raise interest rates? Yeah, well, what's going to hit them? Stagflation? I mean, it's not an economic problem. This is like, if you will, a man-made problem. The British invented this, right? Like a tickle me Elmo gone bad, you know? This is like a tickle me Elmo made out of razor wire. They great. It's their own monster. Yeah, half the British. Yeah, well, whatever. So that's that. So I don't know what they're going to do. You have a central banker from Canada going, this isn't my problem. What am I going to do? Yeah, so the economy kind of sucks there, which is fine because but it should be improving. Like if you go back 5 years ago, I'm just guessing on the number here. I was actually quite bullish on the British pound. The economy had been improving significantly. The IMF really liked what was going on, and we looked at the IMF reports and all this kind of stuff. And I was using the model for GDP to sort of I had a predictive model for GDP out of the UK that predicted it would be dramatically improved just through attrition of bad numbers and good numbers going in. I was really gung ho, and then Brexit came in and screwed it all up. So nothing's changed except the British pound is devalued, and therefore inflation's gone up. But the economy is now been challenged. It was doing good, it was improving, but now it's kind of been challenged, and the pound has been, or pound sterling has been devalued. And why? Because the world thinks the British are incompetent. I mean, how else do you say it? They're like, oh, really? Oh, man, right? So nobody wants to be there. They're like, man, I can't keep my money in London. I'm going to go to Singapore. I'm going to go to Switzerland, right? Who knows? London in 100 years might be like Milwaukee. Milwaukee. Yeah. Yeah, Joseph. So anyways, so I don't have political commentary. I'm just saying as an economist, well, WTF were they thinking, right? So this is really man-made, and I don't know what Carney can do. So let's say the economy slows down because people don't want to invest, right? Going back to GDP, right? GDP, okay, equals consumption plus investment plus government spending plus net exports, right? So what? Well, consumers probably don't feel that confident, and businesses don't feel that confident, right? And if the pound is down, imports are going to go down, okay? And maybe, just maybe, exports go up. Imports, and this is exports, right? Maybe, right? Not necessarily, but yeah. And is it productivity, or can you just buy a Swiss-made Rolex watch in London cheaper than you can buy it in Switzerland? That's probably what'll happen in the short run, right? Right, where it's not like suddenly investment into business inventories has to increase or something like that. It may not happen. But so anyways, long story short, I don't know. That's a man-made problem. And what if Carney has to raise interest rates when the economy is slowing down? That's stagflation, my friend, and that is a difficult thing for a central banker to deal with. And they might be tiptoeing into that mess themselves. Okay, I'm not predicting. I'm just saying I don't know what Carney's going to do, and it's going to suck. It's sort of like when the doctor sits down, and the doctor sits down with the patient and says, "Well, I have bad news and I have really bad news, and what do you want to hear first?" And the patient says, "Well," or the patient says, "Give me the really bad news first." And he's like, "Well, we did a blood test and we found out that you have AIDS and you're going to die." This is an old joke, so it's not politically correct either. So, anyways, you have AIDS and you're certainly going to die. And he's like, "Oh, well, what's the bad news?" He's like, "Well, you have Alzheimer's." He's like, "I have Alzheimer's." Oh my God. Well, at least I don't have AIDS. Anyways, bad joke. I have family members with, yeah, so I don't know. It's bad for me too. But the point is, it's bad in the UK and it's worse in the UK. Right? It's like, no, but no, I have family members that have died died from, not AIDS, died from Alzheimer's and are suffering through dementia. So it's not a good joke, but it gets my economic outlook, I guess. You know, slowing economy, a massive uncertainty, incredible amounts of risk, and a devalued currency that's creating inflation. So they have to raise interest rates to slow the economy down more. And so what happens, yeah, maybe the pound goes up, but then exports fall, but the rest of the economy is doing bad. So then you get falling imports, falling exports, falling investment, and falling spending. I'm just saying it's not a good scenario to be in stagflation. So on the other end, how about the euro? Yeah, what are they going to do? Are things getting better? As Americans getting filthier and stinkier rich, they're looking at opportunities in Europe. Europe's tapering out of bonds. That's usually a good thing. That's usually a pretty good thing. Okay. If so let's just say I don't think Europe is in the intensive care ward anymore. I think they're moving them to getting them a regular hospital room. Things are looking fine. Okay. It's nice to have 400 million people in your economy. The Greek problem. Why, you didn't buy it? You didn't buy Greece? Should have bought it, dude. You had your chance. All right, so let's burn through this. Thanks for hanging with me on the fundamentals. So this is a 4-hour chart. So let's go into here. The bottom here is M2, as you already know. The target is M4. I got a long ways to go. This is a sell zone entry, but it's not really a traditional kind of setup for bears. And you don't typically sell this on a Friday. Okay. So as a bull, do I jump out of this? Well, I'm going to play this as a bottom, right? Does that make sense? Maybe it's easier to see it this way. Okay. That kind of looks like a bottom. You could treat it like a double bottom on a daily or something, right? There's some stuff to the left for show. Yeah, so what do, right? Do I get out here? Yeah, but I'm trying to get this higher. What? It's clear as mud. Okay, it's clear as mud. So I can start playing pivots here, but it's Thursday, isn't it? So I kind of need next week's pivots, and do I change my monthly target? This is my goal, guys. That's my goal. You know it. So 84.50 to 88.50. So it's a 400 pip run. I didn't get in at the bottom. How could I? I had to plan, but I got in on the bounce, right? So I'm up 162 pips, 170 pips, I guess, or at least was 175 pips at one point on a 400 pip move. Now I want to get shy. This is the place to get shy, though, because that's where the bears would sell. So, it's one of these things. It was so difficult to catch a bottom, you know, right? It's so difficult to catch this bottom that I kind of want to get paid for the effort. And I'm okay with nothing, right? But I kind of want to get paid. So I really have to decide, is 175 pips enough for that risk I took? Or should I go for the full Monty? Like, one could argue that if I can get to M4, it's enough of a move up that it doesn't have to be a triple top. Okay. And someone might go long forever, and they're not going for 88 and a half, they're going for 100, right? If we were here, New Year's, I'd probably sell it. So I want to get it up there because that would be such an amazing setup for a bear. That'd be just gorgeous. So I kind of want that to happen too. I don't want it to happen down here. So I don't know what to do, but at least I'm up 160 pips profit, right? Ryan says above 86 it's bullish, right? Right? So you're thinking quite short term. You're playing this a bit. Yeah, yeah, but I think what supersedes all of that is that if you were a bear and you were waiting patiently to sell, where would you be waiting to sell? And that'd be right here. Okay. Okay. And this is what a bear is thinking. There's no doubt about that. So you're like, well, we're above this line. It's bullish, right? I don't want to think that linearly. I'm looking at it bigger. Okay? That's what a bear would do. That's what a bear is thinking. And anywhere in here is a hardcore sell zone for them. So you're like, well, above here, higher, high, higher, low, right? Yeah, maybe on a smaller time frame, but the bigger time frame, that's not bullish. So I'm in it. I have no risk. Do I eat rabbit stew? You know, I'm too stubborn, I think. I don't know. I can't lose, so I'm not in a bad situation. So do I want to make sure I don't win big? I don't know. Maybe I'd feel better at Christmas time with a couple of big wins at the end of the year to say, well, wasn't the year I planned on, but at least December was something. Now I can go to a Caribbean island and buy myself an alcoholic beverage and say, well, at least December didn't suck. So I don't know. I'm just trying to be open as possible. I haven't made a decision yet. All right, Kiwi. The plan was to buy it off the bottom, which I did, have it rally up into resistance, which it did, and then now we're expecting a drop and a rally. There it is. I drew this trade plan at non-farm payrolls almost a week ago. Look at me now. Gorgeous, right? Look at that. This is all from NFP. And where's my tool here? And now I'm up, can't see that. What was it? Not 200. What was it? How come I couldn't see it? There we go. Well, it was 212 or something. So I'm up 180 right now. It's a good start, right? It's probably a 250 pip move. Cool. Look left. Problems. So my target is up here. Once again, what am I going to do? Take profit? Probably should. What I'm hoping is central bankers say things are better than they used to be. And that might be good for me on a macro level. So again, you can see this is not for certain. And I enjoyed a nice good run. And it's time for it to come down. You can see the divergence. It means people are taking profit. But I'm above the M3. This is the R1, right? Yeah. I don't know. Okay, I don't know. Well, Ryan, it just comes down to your tax strategy. So what I was suggesting before is they take their losses now to offset their income, and then they take their profits in January to defer their tax payments. That's what I would do. CAD, kind of a mess, huh? I kind of want this to go up. I'm long at the 786. I'm at break even, can't lose any money. I was hoping for a recovery in oil, but oil did top out, didn't it? So let's go back over to that one. This all started, I believe, when the Kuwaiti oil minister said they're not going to extend their cuts. So maybe more supply. Notice too, that some people just don't understand. I find it amazing that it's a weekly R1. So the predicted bottom for the week is weekly S1. This is a sell zone cluster we identified on Monday. I think we were in that zone. That's very, 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 very bearish. So to a longer term trader, that is a respect of that. price. You were looking at it on daily or something, right? So bearish price target, we'll look at the slope, the distance from the crown to the neckline, and predict it here, which puts us back to 53 bucks. It's actually 52.50. What do you guys? Yeah, 53. That's not really what the neckline says, but that's when you interpret. Okay. One of the neighbor's girls came over selling cookies. I reached in my wallet and I'm like, how much does 32 bucks buy me? Her eyes went. And I'm like, do you have any sugar-free cookies? No, sir. I was just thinking, man, a cookie with this coffee would be good. Cookies. I can't eat it. But it'd be nice. Okay. So going back to non-farm payrolls, we identified a bottom. I want to do it this way, but we identified a bottom. I got heckled all Monday and Tuesday. I was told I was an, what did he say? Bonehead? Maybe at best, I was a bonehead for saying that euro dollar was at support. Like, how can I be a bonehead? It's support. I mean, it's not even an opinion. You know, like, there it is. And then it could go up. And then I said in non-farm payrolls, no, we didn't have this one yet. But anyways, we identified this level as resistance where a bear would resell and came down. Now it's double bottomed and made a higher high. Gee whiz. And he's a hedge fund manager. Like, what does that mean? Right? Like some hedge fund managers are the dumbest people I've ever met. And you can get like you can meet a barmaid and find out that they're one of the smartest people you've ever met. Ugh. Right? He's a hedge fund manager. He's smart. Great. So anyways, double bottom with a higher high now. So cool. At least we talked about it a week ago. Trying to get that kind of flat, right? That's bottomish. Monthly M2 suggests further. Okay, we got risk here. I think that's what I'm talking about in this drawing. And the actual target would be much higher, right? But are we going to get that far, that high up? I don't know. Yeah, I got it marked. So 120, 120, 120. It's funny. So just the basics here, just the facts, man. This blue line also happens to be monthly M2, which predicts monthly M4. That's what the pivots predict. And that's pretty doggone close. to a top, huh? So it really comes down, if you're bullish, are you going to play the R? Probably. I probably will. I probably would. We probably don't have enough trading days and all that kind of stuff, but I think I'd be pretty happy at $1.20. I don't think I'd be very confident that it's going to go screaming from 120 to 121. Although I've seen it in the past many, 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 many times. If it did go to 121, what'll happen is it'll be very slow to get to 120, and then it'll go boom to 121 because it's just going to trigger all kinds of stops. It'll take 3 weeks to move this distance, and it'll take 1 hour to move that distance, or whatever. So I don't know. Again, I'm not saying to buy this. I'm not saying anything except in here on non-farm payrolls, when this currency pair was falling fast and furiously, I just pointed out that that is a monthly M2 and a weekly S2, and that means up. I mean, or at the very, very least, by definition, it means if you're a bear, you need to take profit. And maybe this just proves, maybe, something. I don't know. So here we are now. I don't know what Buddha would say about this. I don't know what Confucius would say about this. I don't know what Trump would say about this. But that looks like resistance to me. And if we can get through that, the next level of resistance would be here. Right? So if you're a bear, now's the time to start planning to sell. And if you're a bull, now's the time to move your stops because bears are thinking about selling. Okay? Okay? And if I was a bear, I'd be convinced to sell this. I mean, look at that. Okay? And if I was a bear, I'd be convinced to sell this up here too, because that is also, I believe, it's a monthly and a weekly cluster. Uh-oh. Gotta take some airborne. USD CAD. Okay. You are the 1, 2, 3, 4, 5. Only you beneath the 4, 5, 6, 7, 8. I don't have it here. So yeah, well, you know what? I don't want to do it, Katie. Oil's down, dollar's down. How could it possibly be good? But let's, you know what? Let's take a look at it anyways. Oh, wow. Is that why you want me to look at it? All right. Okay, there. There. All right. You are the one. Okay. What do you think? An awesome place to buy? No. La da 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 do 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 so I don't think I'd like to buy it here. So a general kind of thought process it would be you know, that kind of stuff. Yeah. But I don't expect much out of that under current market conditions. If oil goes back up off that little bottom I showed you, basically neckline, then maybe this drops for a while, but we're clear as mud on that. Okay. Anything else going on here I should notice? Oh, well, okay, if you're looking at it from this time frame with pivots, the weekly pivots tell me that this pair will drop to 126. So I want to go back to that other chart. So if it drops to 126, I think it was 126.20, wasn't it? Let me double check that. 126.17. So go back to here and adjust this to 1.2617. And boom! So what pivot points predict is this. But of course it's Thursday, so we got to do this New York and then tomorrow. Dollar strength over December, as I see here. Well, what I talked about yesterday was in January. I'd like to see a different flow. Safe haven currencies will probably strengthen. So I wouldn't be certain of dollar strength or weakness. I'd be prepared. So it really depends on where risk has been. So right? So, and would it happen in December? I would think maybe if foreigners have invested in Europe, or let's say Americans have invested in Europe, maybe they take some profit in January, bring that home. Something like that. So I don't know. Don't be certain. Dollars probably in between. Wow, I got sick during finals. Can you imagine? You gotta take some airborne. I have to write an executive summary today for my paper. Bibliography, you gotta tweak that up, make sure that's done properly. Gotta get my appendixes organized, and then I need to go back and reread, rewrite, tweak, and smooth out some things, and I should be done by midnight. Okay. So 8:30. Aussie dollar. All right. So, I mean, look, I covered Aussie yen. I'm up, what, 150 pips profit on Aussie yen, and the US dollar is weak. So what would you expect? Okay. In non-farm payrolls, one of the things I mentioned is people should probably take the swing trading course. Okay. Look at this. Exactly M2, and that predicts this move here. If you're a bull, there's nothing better. Now, if you're a bear, you would have sold here, and you can see bears did sell here. Now, notice it's not like roughly or basically or kind of. These are very, very exact prices, literally to the pip. A bull would buy here, a bear would sell there. That's that. And the predicted top is this red zone. How amazing, right? And even though the Aussie dollar had dropped that all last week, I was the one saying in non-farm payrolls in front of 1,000 people, I understand the Fed's raising interest rates. Don't be shocked if the US dollar weakens. Because remember, everything you've learned about currency trading from textbooks is wrong. So let's put it this way. What happened to the US dollar when the economy sucked? It was strong. So now that the US economy is great, what should happen to the US dollar? So are you telling me when interest rates were falling, the US dollar was strong, and now that the interest rates are rising, the dollar's weak? Is that what you're saying? Is that what the textbooks tell you? Is that what your college professor teaches you? Well, damn, you need a mentor that has real world experience. Who would that be? Hmm. Yeah. So sweet. That's all I'm saying. Huh? Boom. Nice. So, anyways, there we go. So it's funny when you put it that way, right? And was it Monday that I started with an overview of Baltic Dry Index and how it pointed to an increase in demand for commodities, and that increase should probably or is probably evidence of improving macroeconomic conditions, which should impact net exporting nations like Australia. Is that what we did like Monday morning? I think we went through the calendar, but I started with Baltic Dry Index first. Damn, that's pretty timely. So, anyways, hoo, 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 hoo. So I don't know. So I mean, maybe it wasn't such a bad week, right? So not a bad week. Um, the major malfunction for me was gold, huh? I got that really wrong. Because I didn't see it breaking down here. I mean, maybe the channel, but breaking lower than this area, I didn't see that coming at all. So I apologize for that. Okay. But I'm not sure why I did this. Was this yesterday? You're looking at that as a head and shoulders. It's not head and shoulders because there's no uptrend. It's a double bottom. Yeah, I don't use weeklies, so if that made me wrong, then I apologize. I don't use weeklies. It doesn't incorporate fundamentals. And I think fundamentals come first. And once I've made a decision fundamentally, then I look at technical analysis to enter. But I don't look at technical answers for, I don't look at technical analysis for answers on what to do. It's not a strategy setup for me based on technicals. So my strategy is based on fundamentals. So I wouldn't need to look at 5 years worth of technical data to come up with a decision. I think what's more relevant is today's macroeconomics. And then once I decide I'm a bull or a bear, then I drop into a chart and I start looking for support or resistance. But I certainly don't have to look at 5 years worth of data because 5 years ago isn't today. You know what I mean? So back here, I thought gold would go up because I expected the US dollar to weaken, even though the Fed's raising interest rates. So I was right for a long time, and then this collapse as we got closer to the next interest rate decision, and now it's moving back up. So yeah, that sucked. That part sucked. But I don't know. It needs some room to breathe, I think. Okay. So let's pull the plug, huh? It's been real. I got a lot of schoolwork today. Hey, hey, look at that. Nice. So I think I'll do some of that. How am I going to get through this life alive? I was thinking to myself, I'm like, why do I do this to myself? Like, regular people just like watch TV and chill. I was at a bar the other day doing homework with my laptop. I got my headset on. I'm in a live class, and I'm surrounded by 25-year-olds playing pool. They're chubby. They're dressed poorly. They have tattoos. I'm thinking, what the hell are these guys going to do with their life? Here I am, I'm 45 or something, hanging out at a bar, smoking a cigar, but I'm in class. I'm challenging my brain. I'm learning new things. I'm staying sharp as a razor blade. I'm thinking, oh, what are these kids going to do with the rest of their life? And they'll live to 120, you know. And then 2 days later, I'm thinking to myself, what am I doing? Why do I torture myself? Like, why can't I just be normal? Why can't I just watch TV? What am I doing? Why am I in university? Why can't I just put my feet up and relax? You know? Gee whiz. Ryan says, hey, have you made good contacts over the years? Well, in my very first class in my cohort, it came up. I had a business opportunity, and I needed to talk to a senior executive at a major bank. And so I contacted one of my buddies in my cohort, who is a vice president of one of the major banks in Canada. So I call him up. I'm like, hey, man, I need to talk to the Treasury Department of your bank. I need to talk about this, that, and the other thing. He's like, ooh, well, yeah, even though it's Toronto-based, you're going to have to talk to the dealing desk in London. I'm like, yeah, I'm going to need to talk to the VP. And he's like, okay, boom. And all of a sudden the next day, it was literally like, hey, I was introduced to you. I got your name from my Harvard buddy. You know him. He's out in the big TO. And I need some. So anyways, boom, I'm on the phone with the guy running the bank in London. Yeah, it was just like, yeah, my Harvard buddy set it up. It's stuff like that. So yeah, there, absolutely, sure, Ryan, absolutely. Someone else I think it was on LinkedIn or something. Someone was trying to sell a hotel. I'm like, oh, I know someone who buys hotels. So I contacted, sent it to my Harvard buddy. I'm like, hey man, check this out. This guy has a hotel that he needs to move it. All right, cool, I'm on it. So yeah. So anyways, yeah, sure. Um, I have a Harvard contact that knows what Hillary Clinton did on the night she lost the presidential election again. And he's like, it's a pretty funny story. So, yeah, no, that was 3 days later. So what did Hillary do when she lost to Trump? How did that night unfold? I know somebody who knows. And let me tell you, it's tragically funny. Tragically funny. So, but whatever. Yeah, tell us. Then I wouldn't be in the cool kids club anymore. So, anyways, I gotta go. I love you, babe, but I gotta jump. It's just one of these things. I gotta bang out this paper. But I'm here for you. Yeah, John. That's a private conversation that probably shouldn't be recorded. But maybe if we were in a bar. Um, but yeah, so I got to bang this out. So it's really got my attention, and everything right suffers until that's done. And then so I'll see you tomorrow. And then I got another final. I have a final exam on. I think I'll take it Tuesday morning. And it's really cool what they do now. I don't know if you've been in university for a while, but I am a distance student. I live on campus in the summers, but the rest of the classes I take from home. Now I can go to campus whenever I want, and I've done that. I've flown to Cambridge and just sat down in one of my classes. But being a senior executive, I have the privilege of logging into my class live from home. So I can do it either way, campus or here. Now, the interesting thing, like this final examination I have on Tuesday, it's really cool. I log in, and my laptop camera is recording me live, and it captures my location data, and it listens to me, right? It records what's on my screen or screens. So the first time I log in, it's like, dude, you can't have multiple screens. I'm like, what do you mean you can't have multiple screens, right? So so it's interesting. So and so you literally have a virtual proctor. So not only is it recording, so if they feel like you're cheating, they can go back and actually watch what you did minute by minute. But people like a real proctor, like for example, my teaching fellow or my professor could log in and actually watch me take the test live, and I don't even know it, right? If someone else comes onto camera and it notices two heads or two sets of eyes, it red flags and tells the professor, hey, this guy might be cheating. You might want to watch real time. Yeah, it's pretty neat stuff. So instead of flying to Cambridge when it's snowing, I'll take it. I'll take it Tuesday from the comfort of my home. It's kind of neat. Yeah, it's really neat. It's the future of the world. I think Harvard will be around 300 years from now, simply because it's Harvard. But I think the vast majorities of universities on this planet will be gone. People will want to go to Harvard because it's Harvard, but University of blah, blah, blah doesn't need to be there. You can get rid of it. Sorry, Ohio State. So anyways, hey, gotta go. Peace on earth. May the pips be with you. May your profits be above average. Thank you for your patience with me. And I will see you tomorrow again. Joe. Yeah. Dude, yeah, I think half the United States went to Ohio State, dude. Yeah. And I think they have serious drug habits. Yeah. If you haven't walked across the campus of Ohio State University with a duffel bag full of weed, you didn't really go to Ohio State University. Joe's like, no, yeah, don't respond to that. Like, wait, my daughter goes to Ohio State. So I got a lot of friends that have gone there. Let's just put it that way. So see you guys. I apologize to all alumni from Ohio State. See you tomorrow, guys. Yeah, Ohio State's such a beautiful campus. They're great professors. Joe's heckling me right now silently. All right, see you guys. Sorry, Joe.